This question comes from Stefan Jabode of Danville, California, and it raises a question I've certainly never heard before. Mr. Buffett, in the past you have recommended low-cost S&P and again today, S&P 500 index funds as reliable long-term investment vehicles. These funds have certain inherent structural advantages, such as low costs and automatic reshuffling of their holding. But Berkshire also has certain structural advantages, such as financial leverage from the float and diverse capital allocation opportunities. I think of Berkshire as being ahead in this game. For example, it seems to me that if Berkshire's overall operating business and investment performance were to exactly match the total return of the S&P index over a 10-year period, Berkshire's growth in intrinsic value would outperform the S&P 500. If you agree, could you estimate by how many percentage points?
Well, the answer is I won't estimate anything, but if we just own stocks and we own the S&P, our performance would be significantly worse than the S&P because we would be incurring a corporate tax, which would now be 21% on capital gains, plus possibly some state income taxes. And effectively, our tax rate on dividends depends where they're held, but somewhere between 10.5% or 11% and 13%. So Berkshire is a mistake. It's at a corporate disadvantage simply by the way the tax law runs compared to owning an index fund, which has no tax at the corporate level, but just passes through to shareholders. So I don't know whether we'll outperform the S&P 500 or not. I know that we'll behave with our shareholders' money exactly as we would behave with our own money, and we'll basically tie our fortunes in life to this business, and we will be very cognizant of doing anything that can destroy value in any significant way. But we will probably, if there were to be a very strong bull market from this point forward, we would probably underperform during that period. If the market 5 years from now or 10 years from now is at this level or below, we will probably overperform. But I don't think that I don't quite understand the question in terms of when it says the total return of the S&P over a 10-year period and Berkshire's growth in intrinsic value would outperform. I don't know whether that will happen or not. Charlie?
Well, there'd be one big advantage for the shareholders that pay taxes, and that is that the Berkshire shareholders, even if we just match the S&P, we'd be way ahead after taxes. We all have a pretty decent role in life and a pretty good position. We shouldn't be too disappointed.
No. If we could have structured, going back to partnership days, we could have structured things so that actually over a period of time doing the same things we did would have come out somewhat more favorably for shareholders if we kept it to the original partnership group. But the present form hasn't worked badly, although we have had periods when our corporate capital gains tax, as opposed to the individual, I think it got up to 39% a couple of years or 1 year, and certainly was 35% for a long time. And then on top of that, we had state income taxes in some cases, and they exceeded. Well, I mean, if you owned a pass-through fund, you did not have that level of possible double taxation. Now, if you hold your stock forever, you don't pay it. But if you actually sell your stock, you've had a double tax effect. We're not complaining in any way, shape, or form. This country has treated us incredibly well. And we've had this huge tailwind, which I wrote about in the annual report, and it wouldn't have happened in any other country. So we've been very lucky that we've been operating in this country at this time.